Deven Choksey is also ready. Let's connect with him to understand the market setup. Deven, good morning and thank you for joining us. Deven, I'm going to straight, take a dive into individual stocks. ITC, what really broke the back of ITC yesterday? Buzz, rumor that the excise duty on tobacco and cigarettes would go up. Was that the only buzz which broke the back of ITC yesterday?
Yeah, good morning, Nikunj. Yeah, for sure, I think the disproportionate hike in the cigarette prices could possibly have its impact onto the cigarette sale. I think that is what I think the buzz is. Though I think it could possibly have a temporary impact. That is what we believe. Because I think for a company like ITC, I think there is an element of, other business model which has already started picking up. So to my mind, I think the theory goes like this, that in immediate terms, they are maybe having some impact onto the cigarette sales because of the disproportionate hike, I think that is being talked about. And I think the money which is saved in the hands of the consumer ultimately will get utilized for other FMCG products. That's the theory which is going around. So at least in the immediate term, I think the stock price is taking the hit at this point of time. I don't think that beyond a point of time one should be worrying about the ITC company per se. Of course, I think if it gives you the opportunity at the corrective down under levels, I think this is an opportunity to buy into the portfolio. So I'm relatively more confident about the company's other business model, which is going to bring better amount of performance to the company vis-a-vis the cigarette over a period of time. And I think that is an opportunity that you are getting at this point of time to buy into this company.
And even cigarettes, Deven, the excise duty on tobacco and cigarettes has gone up, and it has gone up quite dramatically in the last 2-3 years. The cigarette volumes have not come down dramatically. Cigarette is still the mainstay for ITC, and like they often say that, prices never change habits.
Yes, that's true, Nikunj. I think that is why I'm saying it's a knee-jerk reaction coming in from the people, and with the theory that is being spelled out is that I think immediately people may resist to an extent. I think the smoking habits may come down, which may be good eventually, but the fact is that I think it's unlikely to be. Where exactly you will see the amount of money getting spent would be in the other products at the same time, where they also have the products in FMCG space. So I'm relatively more confident that even if I think one wants to take a view that the cigarette will bring down some amount of business for ITC, it would get compensated somewhere else in the FMCG space. So strictly you're right actually. I think the price elasticity theory is not applied I think on this particular subject. Here probably I think people cannot leave their old habits, and that's where I think you might probably see marginal dent in the business of cigarette, even if I think the disproportionate hike in the prices take place.
Deven, hi, morning. What explains the huge spike up in ONGC? Because if it was ITC at one end, it was a tug of war with ONGC and the likes of the other oil and gas majors, and especially in the light of the Prime Minister actually meeting some of these oil companies to, extrapolate a decision, or rather, prepone a decision on the gas price hikes and, make it happen as soon as possible.
Yeah, that's true, Aisha. The same thing, I think the Prime Minister is basically taking his personal interest in this particular subject of resolving the issue or pertaining to the gas price hike, one. Second thing, I think they're seriously working, it appears that they're seriously working on phasing out the subsidy related issue, and that clarity might come up sooner than later. So both these aspects are going to be very positive for likes of ONGC. If one takes into account that if they are getting the differential price formula, then in such situation, if one can consider that additional 10 MMSCMD of production for ONGC in the current financial year would end up fetching them around 2,000 to 2,500 crore worth of additional profit for the company. However, if they give the average rate, which is being also, I think, one theory which is being talked about in the media today, if they end up getting, I think, in between rate of somewhere around $6.8 per barrel, then in such situation, I think for the entire production of 60 MMSCMD, the company would end up getting the incremental hike in the profits at this point of time. So to a greater extent, I think whichever way you look at it, the likes of ONGC could be beneficiary for sure. And that's where I think the one is taking the opportunity at this point of time. Also consider the fact that the global players, when they enter into Indian markets, and when the government wants to reduce the fiscal deficit, they will have to offer quality papers, and quality papers can be offered only with the clarity in the policy. Probably I think from this point of view also, many of the oil companies are offering good opportunity to the investors, because I think government may end up giving a complete clarity on how they want to charge the subsidy, how they want to bring up the price hike issue. And on that basis, probably I think most of the new money will come into some of the papers like ONGC. So I'm relatively more confident that this kind of situation is giving an opportunity to investors to buy into likes of ONGC. So it's an investment stock in a corrective market.
Deven, I want to get your views in on the sugar space. Post the SOPs being announced yesterday, is there still time to buy any of the sugar counters, or do you think this was just a one-off pop because of the, good news coming in?
Well, I think this could be probably one of the better of the good news that I would call it, I think, from a perspective of looking at the industry. I think at one stroke, I think they have probably resolved so many problems, as I would call it, by increasing the import duty to 40% from 15%. I think they've given a kind of a space to sugar companies to probably adjust their prices to the market prices. In a situation where they have got higher amount of go-down stocks, they still get an opportunity to, I think, adjust the prices in a festive season to the market prices. That's a good point, because ultimately I think these prices they will fetch would help them to repay the loans to the farmer. So in a way, I think the bank otherwise would have got in a situation of getting trapped into the entire situation where the sugar companies would have probably, I think, ended up giving tough time to banks as far as I think their payables are concerned. I think through this particular process, at least I think the banks are also saved. And to my mind, I think giving the higher amount of import duty advantage to these domestic companies, that is likely to work better for the most of these companies. So to my mind, I think one will have to look at companies very selectively where the debt component is relatively less. Though I think the sugar companies in the UP may get benefited out of this particular move, but I would like to play safe, and I would probably consider likes of EID, Parry, I think where the opportunity remains, I think, quite strong, also because of the sugar refinery that they have got in place with them, and at the same time I think other investments that they have in the portfolio. So to a greater extent, I think the safety would be more with EID, Parry, vis-a-vis there's some benefit which may go to some of the UP based sugar companies.
Deven, how do you propose one should now bet on Indian consumer? Consumer staples are taking it easy, but consumer durables and consumer discretionary stocks are making a comeback. Be it autos, be it names like Titan, Whirlpool, or be it expensive consumer names like Jubilant Foodworks, Bata, or something like Cable Kiran.
Yeah, I think it's very clear that I think many of these companies within this space, I think, could probably see a quantum amount of jump going forward in the business. Consider a particular viewpoint that if government ends up giving higher amount of exemption from income tax to people in this budget, and in turn would leave more amount of money in the hands of people, consumers ultimately, who would in turn, I think, would start spending more money. So if that particular theory works, then in such situation, I think most of the consumer companies would probably see the consumption rate going up in a little larger proportion. Be it auto, be it many of the personal FMCG companies, as we call it, I think there you may probably see a higher amount of the business coming up. Now, if that is going to be so, then in such situations, the profits of the companies would probably increase going forward. We believe that auto in particular, I think, is likely to be in a sweet spot, because what we are seeing is that I think good amount of possibility of new models coming up into the market that would probably drive the demand at the same time, and along with that I think the credit cost may probably come down going forward because of I think the steps taken to bring down the fiscal deficits. So all in all put together, likes of autos, I think in the Bajaj Auto, for that matter, or Tata Motors or Ashok Leyland kind of companies, where I see the possibility of a higher amount of business and the growth could be seen going forward in next 12 months to 18 months time from now.
Deven, what's the view on IT? We saw a good rebound coming in all of last week, but then again yesterday saw a pause coming in. How would you approach IT right now, and is it more of a trading play as opposed to an investment bet in the short term?
Yes, certainly. I think it is likely to be more of a trading play, because I think from the fundamental perspective, the valuation remains on an adequate side. At least I think ETCS kind of companies, if not everybody else. Infosys and HCL Tech still remain, I think, little notch lower, I think, compared to the others, as far as I think their valuations are concerned. So closer to 3,000 for Infosys, I think, is a good buy opportunity, and somewhere around 3,400, 3,450 would be, I think, good sell price for the stock, because I think this is where I think you will probably play on the valuation. But more importantly, I think there is one particular possibility which I would like to look at. In the budget, I strongly see a possibility of the companies which are bringing foreign exchange in the country might get some extra soaps. And those companies would include some of the pharma names, some of the IT names, also some of the industrial export companies, where you are probably seeing the higher amount of forex earning coming into. So those companies might probably get little better advantage comparatively, because the government certainly wants to look at fiscal deficit in a totality, ultimately in current account deficit as well. So to a greater extent, I think the foreign exchange earning would be given more importance. And that's where I feel that I think there could be a good possibility for an upside in many of the IT companies. So if this correction is an opportunity at lower levels, likes of Infosys, HCL Tech, even for that matter TCS, I think could be bought at lower levels and held into portfolio for the budget related gains that one could probably consider in this kind of a market situation.
Deven, the Mindtree has touched a record. This is one mid-cap IT stock which is just moving from strength to strength. It's not a cheap stock. They don't have the best margins in the industry, but the stock has been a ranked outperformer.
Yeah, Nikunj, I think we have not got the coverage on this company, so won't be able to give any specific view on this company, so excuse me for that.
You track Persistent?
We like, I think, within the mid-cap IT space, KPIT. We have been liking this particular company more from the point of view that the business model of this company is shaping up very well with the new IPR that the company has been filing. And this IPR is largely, I think, catering to some of the verticals like auto. One of the product, Revelo, I think, which is likely to find the commercial success in a near future, and that's where I think we see a kind of a revolutionary kind of an impact coming into this particular product as far as the business of the company is concerned. So to a greater extent, I think we somehow other select, I think, such companies where we see a long-term future for, I think, the mid-cap players like KPMT, where we are seeing, I think, 20-25% of growth continuing. At the same time, I think the new product launches based on the IPR filing that they have could create an inherent valuation for this stock in the balance sheet. So I think this is one company which we find, I think, attractive within the mid-cap IT space.
Even a freight hike is bad news for steel and cement. But yesterday what made a comeback was steel and cement. How come markets did not react to that railway freight hike? In the short term, it's bad for demand. In the short term, it will have an impact on demand. In the short term, it will have an impact on margins also for both steel and cement companies.
Yeah, true. I totally agree with it. But I think in an economic scenario where the improvements are likely to be seen going forward, because the way in which government has started clearing some of the projects, other day we read that about 21,000 crore worth of projects were also cleared by the government or the PM's office. So from the perspective of looking at the actions which are taking place on the ground, the results are likely to be seen 3 months, 6 months down the line. I do